Okay, I want to start off with the 10-year, the weekly view, or the weekly over a 10-year view. And you're probably asking, why am I doing that? Whenever the market throws me for a loop, I like to kind of step back and take a look at the big picture. As you can see, we are, setting new highs. We are past our 50% retracement of the last major down leg. We are at about 50% retracement, by the way, of the last high that we had back in 2000. And why do I bring that up? Well, the markets do have memory, and this is why technical analysts are able to make calls, sometimes right, sometimes wrong. But regardless, there is some memory from that prior period where we did have a substantial bear market correction. And we are right now in a zone where there's quite a bit of congestion. If we look in this area, in the 1250 down to the 1060 range, we can see that historically the market has, got caught up here. And there are a lot of people who bought into the market at this time that are probably looking for an opportunity to get out when compared to where they were just 9 months, 10 months ago. So this is a frightening situation when you're short. But at the same time, we've got to keep our heads about ourselves because there's a lot of work that needs to be done still. So at any rate, I also want to point out on this chart that I really do feel as if we're topping here. It has as we'll see, it has a familiar feel to it. And I ask you to kind of look at what happened in 2007 when we had this similar pattern develop. And if you look, we had this, kind of relentless a correction, not quite making it below the prior correction, still maintaining the uptrend, and then another quite impressive rise above the prior high, only to come cascading down and to fail. We have a very similar situation developing here. This is rudimentary analysis, but it definitely has a similar feel in my book. Also, again, looking at the test of this trend line, we had it. I sure as heck would have liked to see it continue to go down, but I didn't quite expect that to happen. We are approaching the 200-period moving average again in that 1250 range. I think it's really possible that we're going to see this 1250. I hate to say it, I just don't think it's going to happen rapidly. I just think that we have a lot of work to do here, and I think we may see some throwback in the meantime. At any rate, that's to look at the weekly, 10-year weekly chart. I'll draw your attention to the hourly chart, the last 20 days. This is a chart that I like to look at. I think we are clearly wedging. I think we broke out of the wedge, in fact, and came back and tested the lower support line, rejected, and we've come back and tested it again. The only difference is that the upper resistance line of this wedge is now converged with the lower support line, and that's exactly where we are. Studying the RSI, we see that we've had this kind of progressive drop in the RSI, a little bit of recovery here. We're still in the overbought levels, but with negative divergence. Rising wedge, negatively diverging RSI, overbought levels, good amount of distance up and above the 20-period moving average, good amount of distance obviously above the 50-period moving average. What I don't like about this is that obviously we have expanding Bollinger Bands, which means that we have volatility increasing. Volatility with upward price momentum. So, but, this definitely feels to me that we are potentially topping here, that we should see some kind of throwback The number of days that we've been rising relentlessly is, quite a count at this point. 5 with a break, 6, 7 with a break, and 2 again. So I think we are, reasonably to expect some kind of a throwback. Well, that's my phone, fellas. I've got to run.